In this video, we will look at a remarkable 1 to 5 risk to reward full trade breakdown using ICT trading concepts including daily bias, top-down analysis, liquidity hunts, order blocks, Judas Swing, power of 3 and OTE. Daily bias to be bearish because look into this area in the 4-hour chart. When you look at the 1-hour chart, market structure shift, displacement, sell side liquidity for us to target, 15 minutes chart, London taking Asian lows. We call this Judas Swing. This is power of 3, the wrong direction to trap traders so that smart money can start selling 15-minute bearish order block. 5 minutes chart change of character with a displacement. We place the sell limit out. So this is where we take our first partial profits at London lows. Profit here as well. This is where we exit our trade for 1 to 5 risk to reward. Okay, so I'm in the micro mini Nasdaq index futures daily chart. The first thing what we have to do is when we are taking a trade, we need to look into the daily bias or the direction. So if you look over here, recent price swing, price is going up in an uptrend all the way. So then if I consider this recent price swing from here to here, which has made a break of structure here up, if I look that price swing, and if I draw a fib level into that price swing just to get an idea of what's happening over here to the price, if I just draw it over there, then you can see this price swing up making a break of structure, then price is in a retracement and price has retraced to the fib 79 level and pushed up. So that gives an indication that in the daily chart in this area now the price is pushing up. So then if you look over here, from that point onwards, you can see the price again retraces and again push up. And what happens here now is over here in this price swing up, the price has made a minor break of structure. But if you look at this minor break of structure over here, once it makes a break of structure, you can see if you look over here, it's not showing a strong willingness of price going up. What we can see is in this daily candles, it's making a wick at the top. So this wick gives us some reasonable idea that the price is probably not willing to go up. And since it has now made a swing high over here with some wicks, so our idea now is if I now delete this fib and if I just draw the fib, let's say for this price swing, it can be from this leg to this leg or from here to here. So this is just to get an idea of what price would like to do. So if I draw it from here to here, for example, right? And then if I look here, the idea is, okay, in this price swing over here, now it has made a swing high and it's not showing the willingness of going up. So what we think in this day is the next day. So this is Wednesday candle. On Thursday, what we are looking for is for the daily bias to be bearish. Because why we consider the next day daily bias to be bearish is now we look this swing up and then we look at the fib and now we are thinking the possibility of the price going down into around fib 62% to 79. So with that idea, so on next day our daily bias we start with a bearish bias. Okay, so now let's jump into the 4-hour chart. So now I'm in the 4-hour chart of micro mini Nasdaq index futures. So if I look here now, as I said, we are expecting the price to go down into the fib 62%. So if I look into this area in the 4-hour chart, we can see we can consider this as a liquidity hunt because this equal highs and this equal highs over here. So all these equal highs has been hunted. Above this we got buy side liquidity because there are a lot of traders would place sell entries here. So the buy side liquidity here and the buy side liquidity above this has been hunted from this swing leg. Though the liquidity is hunted, the price is not now showing the willingness of going further up. Instead of that, you can see in the 4-hour chart also, so you can see the price is now if you look over here, there's a minor change of character down because the price has been making higher highs, higher high, swing highs, and making another higher high, a swing high. However, after that, you can see in the 4-hour, it has gone below this swing low, this candle. That means we can look at it as a possible change of character down. And you can see that change of character down, breaking this swing low, has been done with reasonable displacement down. And then if you look at that change of character, then you can see in the 4-hour, this green candles going up can be considered as the retracement of that push down. And now the price is in this area. So now we are looking into trading on Thursday, having a bearish daily bias. Okay, so now let's jump into the 1-hour chart. When you look at the 1-hour chart, you can see the price in this area, the price was making higher highs and higher lows. That means the price is in an uptrend. And then you can see once this higher high is made, after that you can see the price is making significant displacement down, breaking this swing low. So if you look at this area, the price made a higher high and made a swing high. However, the swing high is lower than this swing high, this one. So it's like a pause of the trend and making down. So you can consider it as a market structure shift in this area in the 1-hour. What this tells us is once swing leg comes down with displacement, and then we can consider this as a retracement of that. And then you can see the price is trying to push down, but you can see it's unable to push down below this swing low. So you can see it's making a retracement, and we can see in that it's grabbing liquidity above this swing high over here and the price push down. So our overall bias is bearish based on the daily analysis. So we are looking for all signs of supporting bearishness. So we can see this liquidity grab and price pushing down, that we can see as a bearish, supporting our bearish idea. Not only that, we can see in this process, while it's making this range, we can see the price has made swing low here, which means that is possible liquidity for us to target if we take a bearish entry somewhere here in the New York session. So we look that as sell side liquidity for us to target, but still we are not sure where we are going to take the trade entry. We still look for price action. And with all that, we can see with this market structure shift, we can see the uptrend in this area is now showing us signs of converting it to a down trend, which supports our bearish bias. So what we now do is, this line is the midnight open of Thursday. So now we are analyzing the London session price. So this is the London session from 2 to 5 over here, and we can see it's going above midnight price. So us to get a more detailed analysis, now we go into the 15 minutes chart. Okay, so now let's jump into the 15 minutes chart. Okay, so now I'm in the 15 minutes chart. The price action signatures we saw in the 1-hour chart, now we can see they are also visible in the 15-minute chart. For example, you can see this strong price leg down. Every time the price is going down, you can see it's going significantly with displacement in these locations. So all that are showing us signs of possible bearish entry, short entry for us to take. So what are the other price action signatures we can see over here? So also we can see during Wednesday, New York PM session, it has taken liquidity above Asian session over here. So, and after taking that liquidity, you can see a sharp price down, displacement and displacement over here. So with that idea, if we come into Thursday today, because this is where we are thinking of taking a trade entry on Thursday. So now you can see on Thursday, this is the midnight open, this is the Asian session. You can see before London, it grabbed the Asian loss, liquidity, and the price pushed up. However, now you can see when the London session is over, it has made a swing high over here. So then what we are now looking is the price action, let's say until New York AM session, let's say 8:30 AM, because we are at least waiting till 8:30 AM for us to take a trade. So now what can we see in the price action? We can see displacement, then as I said, London taking Asian loss, grabbing sell side liquidity and price pushing up. However, we can see the price did not push up above the Asian session, but price came here, made a swing high, and price pushed down. You can see there's a swing low here. When we go to 5 minutes, you can see this 5-minute swing low, this price breaking down is significant in 5 minutes as a change of character. We'll see that in a while. This is also showing us signs of price not willing to go up, because after this swing high, after pushing down and let's say making a change of character here, going down, see the price push up and it has made a swing high here, and that swing high is lower than this swing high. This is lower than this swing high, it is lower than this swing high. So it's all showing us possible bearishness. And also we can see sell side liquidity where we can target if we take a sell entry here to take profits. So this all price action, and this is also, you can look it as a range in, let's say in the 15 minutes where we got liquidity down here, and also we can see in this range the price is showing bearishness. So with all that, and then we can see, if you look at it carefully, this is the midnight opening of Thursday. Now the price during London session has gone above the midnight opening. We call this as the Judas Swing, and this is the concept of power of 3 as well, where the price make a false move and take the price in the opposite direction of where we target to trade. So basically this is the concept of power of 3, where it accumulates orders and then it manipulates. So manipulation is the price going in the wrong direction to trap traders, so that smart money can start selling into those trap traders. So during this Judas Swing, power of 3 manipulation, some retail traders will start buying because they think the price is going up. That is where smart money will start selling. And we can see the smart money footprint of selling over here, since it makes lower lows. So not only that, in the 15-minute we can see a bearish order block and a sharp push down. So this bearish order block, so the price is respecting this 15-minute bearish order block as well. So that is another positive sign for us for a sell entry. Now we go into a low level 5-minute chart and see where we can take a possible sell entry. Okay, so now let's jump into the 5-minute chart. So now in the 5-minute chart, you can see this swing low to this swing high, where I took the price up, the price pushing sharply down, and during that price push down, you can see this swing low has been broken down. So you can consider it as a 5-minute change of character with a reasonable displacement. And then with that, you can see after that the price coming and retracing into this area. So we are still checking what the price would like to do. So the price grabbed further liquidity above this swing high. The price has grabbed the liquidity, so it went above this 5 minutes order block, but it came back to the order block again. It grabbed the liquidity, so it is a possible liquidity hunt. So we look for these signs before we enter into a trade. So now the time is 9:20 New York time. So we are still looking for possible signs of confirming us a bearish entry. And now you can see the price made a clear displacement down. So this is a possible confirmation for us that the price is willing to go down. And this is a possible liquidity grab where smart money push the price up and grab the liquidity and start pushing the price down. So that is the footprint of smart money. Now what we do is, with this price move, we go into 1-minute chart to see how the price is behaving. Okay, so now let's jump into the 1-minute chart. So in the 1-minute chart, if we look here, you can see the price push down strongly. And now what we look is for a possible entry. Now the price is coming into a possible retracement. So after seeing this swing low, what we do is we draw a fib from this swing high into this swing low. So this is where we are going to take the optimal trade entry after all these price action confirmations. So what we do is we place a sell entry into this 62% fib retracement level or T level. So we place a sell limit order in the fib 62% 1 minute. However, to put the stop loss and the take profits, we will go to the 5 minutes and 15 minutes. So now if I go to the 5 minutes chart, so we can see in the 5 minutes chart, the Asian range liquidity has not been grabbed. It's very close to grabbing that. So we keep some allowance in just in case if the price wants to come and grab the Asian range liquidity, we keep some allowance about this. And how we decide that is we look at our at least a 1 to 2 risk to reward ratio. So we target London loss. Generally the London loss is what we target. So 1 to 2 at least minimum. So based on that we decide we give a buffer for a stop loss. So now we place the sell limit order and we wait for the price action to play. So when we place a trade, it can be a winning trade or a losing trade. So this is a game of probability. But we have all the high confluences for a sell entry. So now let's see how the price works. So once we place a sell entry, sell limit order, so you can see the price came up and it tagged our entry, so that we are in a sell entry now, and the price strongly pushed down with strong displacement. So this is where we take our first partial profits at London loss, and then we will leave some part of the trade position to run further down, targeting further liquidity in the 15 minutes chart. So if you go to the 15 minutes chart, you will see the price has further gone down, and what we do is we take partial profits here, and then we take another partial profit below the previous day New York session low, and also below this low. So this is where we were originally targeting sell side liquidity. So we grabbed profit over here as well, and we left some part of the trade to further run until the 15-minute candle closes. So when the 15-minute candle closes with a slight wick, this is where we will exit our trade, because this is day trading, and in day trading these are quick trades. So we are happy with Fib minus 200 standard deviation level over here. So what we do is we take another partial profit at this, but we wait to see if the 15-minute candle can go further down. So then we leave the last part of the trade until the 15-minute candle is over, and when the 15-minute candle is over, this is where we exit our trade. So we exit our trade for a remarkable 1 to 5.89 risk to reward trade. So we took our trade in the 1 minute chart, but we managed to trade in the 5 minutes and the 15-minute charts. So this was a remarkable 1 to 5.89 risk to reward trade based on the concepts we teach you. So we use the daily bias, and we determine the daily bias from the daily chart. Then we use the Fib retracement levels, and then we went to 4 hour. And so we look into the price action, into possible market structure shifts or change of characters and change of trends. Same in the 1 hour chart, we look into that price action, and then we came into 15 minutes chart, and then we look into similar price action in the 15 minutes chart to see if the price was supporting our bearish biasness. And with all that confluences, with liquidity sweeps and liquidity hunts, then we go finally into 5 minutes and 1 minute and look into the 1 minute price action supporting the bearish biasness with displacement, and we use order blocks to support our confirmation, and then we further look into liquidity hunts, and finally when the 1 minute does the displacement, then we draw the Fib and get the OTE value, and then to put the stop loss and take profits, we went to 5 minutes and 15 minutes. So that is a remarkable trade with the concepts we teach you. Okay, so it's end of the video, and we will see you in another video.